Let's talk about whether that plan would lead to the intended consequences, meaning the repatriation or building of factories and manufacturing capacity in the United States, with James Lucier, Managing Director at Capital Alpha Partners, and Tobin Marcus, Head of Policy and Politics at Wolfe Research. Welcome to both of you. James, let me begin. Former President Trump saying, among other things yesterday, that his favorite word in the dictionary was tariff, and that he wants to do this because he thinks, number one, it will protect American companies that manufacture here, but number two, that high tariffs will cause foreign companies or American companies that are manufacturing overseas to repatriate that manufacturing here. Is there any evidence to support that that happens?
Not really, no, Tyler. In fact, not at all. The studies consistently show that tariffs are ultimately passed through to consumers. Now, you can argue whether or not 100% is passed through right away. If there is a direct substitute in the United States, maybe it's not all passed through. But what we're seeing is that tariffs are effectively a tax on consumers, and that's completely consistent in all the economic literature.
James, a lot of the tariffs that President Trump put in place in his administration were against China. They were pre-COVID. They continued through COVID. And, of course, we had post-COVID a tremendous amount of inflation, which I think was mostly attributable to supply chain issues and opportunistic price raising on the part of companies. But how much did tariffs, if any, contribute to the inflation that we saw in the 2021-2022 timeframe?
Well, obviously, tariffs can contribute, but it depends on whether a tariff, like a tax credit, is permanent or not. If President Trump is putting a tariff on China in the context of a grand negotiation, a big deal, where, hey, I will tariff you today, but in 6 weeks, 6 months, next year, I'll take the tariff off, then companies which are worried about a difficult consumer environment, like there was during COVID, aren't going to pass that tariff on right away. They'll absorb it as long as they can. But once it's clear that the tariff is permanent, once it's clear that the tariff is going to be even higher, then I think they do pass it through. And I think the COVID experience validates that perspective.
Tobin, let's say hypothetically that President Trump prevails in the election and is able to push through the kinds of tariffs that he says he wants to push through. Which American industries and which American companies might be the biggest beneficiaries of a very much higher American tariff regime against foreign companies?
So when we think about winners under tariffs, I think there probably are more losers than winners. Certainly when you look across the consumer and industrial space, there are a lot of companies that have exposure to China, either in terms of exposure to Chinese supply chains that will mean they are facing cost and margin pressure, or exposure to Chinese end markets that'll mean that they're facing the risk of lost market share from retaliation. But when we think about winners, I think the farther you go down the value chain, the cleaner the story is that you are, potentially benefiting from the loss of foreign competition without also facing higher costs from tariffs on your intermediate inputs, which is a concern for, a lot of U.S. manufacturers of finished goods. Even if they are benefiting at some margin from tariffs, they also have to worry about lost competitiveness vis-a-vis non-U.S. competitors. So, I think steel and other basic materials are probably the clearest story about potential winners from tariffs. I think certainly investors are primed to play steel as a space that stands to benefit from tariffs, even though we do have quite substantial tariffs already in place on Chinese and other global steel products.
So if I heard you right, you said that basically the imposition of tariffs would cause more pain than there would be more losers than winners, is I think how you put it, and that those losers would be American consumers because they would end up paying more for the consumer products that they buy that are imported. Am I understanding?
Yeah, I think there are losers both among producers and very clearly among consumers. From a consumer's perspective, as James was just laying out, and I think we see this similarly, we would expect this to be inflationary. Every economic study of the impact of Trump's tariff proposals or tariffs historically shows that most of those costs are internalized by U.S. consumers. So I think that'll show up as higher inflation, probably also as higher rates as the Fed responds to the possibility of inflationary shock from tariffs. And then on the producer side, again, anyone who is incorporating imported intermediate inputs into final manufactured U.S. goods, whether from China or anywhere else, faces some possibility of cost pressure from higher tariffs on those intermediate inputs. And intermediate inputs were one of the areas where Trump moved most aggressively to impose tariffs on Chinese imports back in 2018 to 2019. And so, if you're then a manufacturer of finished goods in the U.S., if you're facing higher prices, your global competitors are not, because they're not implementing similar tariffs.
So before I turn back to James, Tobin, one final question for you, and that is this. It would certainly seem that if we go to a high tariff regime under a second Trump administration, that foreign manufacturers, foreign countries, most notably China, would not take that sort of lying down, and that they would retaliate one way or another. And I could think of several companies that China would be pointedly retaliate. Might be Apple, might be Nike, might be Starbucks, might be others that do large business there, or the pharmaceutical companies that buy constituent chemicals from China to put into drugs that are manufactured and assembled here. Am I off base on thinking that?
No, you're exactly right. I think retaliation is a significant risk. All the event studies of the 2018-2019 Trump trade war with China during his first term suggest that we saw, a disproportionate underperformance for companies that were exposed to China, either in terms of their supply chains or those risks of retaliation. And there have been headlines, already this week about various of our trading partners, including the EU, preparing sort of ideas about targets against which they might retaliate if Trump does fall throughout some of these global tariff threats.
James, what